Now, in segment 3, we always want to look at what's happening with global flows. How are they changing? And not just looking at crude, but also crude and refined products, because they are a big part of the same, piece in the same supply chain. So we want to look at how is that changing. So here we're looking at crude oil flows. You can see that Saudi Arabia continues to be very tight on some of their where they said they were going to be, which the market really needs right now, because if they were to bring back the 1 million barrels, we would have a much bigger drop at this point in time. But when you look at some of the flows, Iraq, Kuwait, and UAE, things have slowed back down. Kuwait was a bit higher. So you can see the ebb and flow, but the peaks are getting higher, especially Iraq. So when you look at OSPs, you had Saudi that took OSPs higher again, just keeping themselves well priced out of the market and really causing people to pull up. But also that allows the other nations, that especially the ones listed here, that can charge higher prices, they can still undercut Saudi, but still increase pricing, which is something Iraq has done very well and has continued to benefit from. Now, one of the things that we want to look at is the disconnect between futures and physical market. So one of the things that we had said when when Brent was trading at 95, 96, was that the physical market never ran up with that number. So the view that we were going to go from 96 to 100, it's like, well, the physical market's kind of saying, we're kind of here. But at the same time, it also doesn't support a huge drop from, let's call it 96 to 80. It's kind of holding us in the middle right here. And it's interesting because then when we start looking at some of the data, Nigerian barrels for prompt supply have weakened as strong backwardation, shrinking refinery margins, and seasonal maintenance all hurt differentials. So again, you're looking at this and everyone's like, well, let's pull back a minute. Let's let some of this come down, because you had a huge snap up in backwardation, which is going to start to come down a bit, and you'll start to see kind of that balancing act when you start looking at some of those flows. But when you look at the trade side, November West African offer levels are higher, but trade is yet to begin in earnest aside from Angola. So again, the offer levels are still higher. Like, you're still stronger than you were. You weren't at $96 to $105 strong. You were at $85 to $90 strong. And that's one of the things that we've been talking about, is that we were going to see that pullback, which is why our range was 88 to 96. We do think that after some of this gets baked in, you do have a bit of a bounce back to those, 90, 91 level. And then we will see that pullback. We don't see demand being stronger. We do see some of that pressure coming through, and that's going to hinder some of those future prices. And realistically, when you look at backwardation, that'll cool off. We'll still stay in backwardation, just not to the degree in which we've seen, and we'll show you some of those charts. Vital lowered an offer of Nigerian crude to dated Brent of 290. It was initially at 315. Strong backwardation dated Brent is cutting into differentials for prompt barrels. Nigeria's offer levels are being touted at $1 to $2 barrels, in excess of the country's latest OSPs, which already were boosted to 13-month highs. Relatively, though, few November barrels have traded so far, and some October barrels are still outstanding. So again, they're trying to push those levels. They're just not seeing the demand side, which is why that move from 96 to 100 or 105, we kept saying, like, look, the physical market's not saying that, and here's why. But at the same time, it's also not saying that, oh man, like Nigerian crude went negative against dated Brent. It's trading below OSPs, which then would mean, well, 87 is likely going to become 80 to 78. It's here, and it's kind of just figuring out what percentage above that strength is it going to be, and that's where we continue to sit. Relative indications may be too high to secure buyers, particularly for the lighter grades. Middle distillate rich grades are performing better, not surprising, due to the middle distillate, kind of those grades being in shorter supply. November offer levels are stronger too for Congo, not surprising. And that's where we continue to see some of these different shifts in general. So it had jumped from 50 cents to $1.50 above listed price. And again, it's not surprising. It's just that's why this $4 drop in crude is a bit excessive. It's right sizing, but as anything, there's overreactions up and down. And that's the same thing here. We saw the pullback. We've been saying that was too high. And here is where we continue to see the decline. Now we look at crude oil flows from Russia. You can see that there was that big spike, big pullback, but it's all about timing. If anything, we see that averaging closer to the levels because realistically, they're at a 3-month high, which if you go back in time, is still going to be above what they agreed to OPEC. And that's something that we continue to see as kind of a key driver when you look at what Russia's trying to do is they're pulling this product off the market, but they're going to have to put that crude somewhere. They don't have the storage for it. They don't have the pipeline for it. They don't want to turn off wells. They don't want to shut anything in. So that's where we're going to continue to see some of these flows coming out. And I think this is really good at putting into perspective some of those levels where when you look at as we got into the close of September, we had that elevated level and it's going to stay at that higher end and will still be, again, above what they promised Saudi Arabia they were going to do. Now, when we look at global, gasoline and distillate exports coming from China and India, it's very aggressive coming from China. India slowed down a bit. We have seen a bit of that domestic demand increase, but China is trying to right size, and they're taking advantage of that export market. There's still a healthy margin out there for distillate, but you're still seeing some of that sluggishness internally on the distillate side. So they're, again, trying to manage that and take advantage of it. The question has now been posed: are we going to see a fourth export quota? And they are saying no now, but realistically, they also want to know: are we getting close? Like, what does our storage look like? Did we have a warm or cold start to the winter? Where is LNG going to be? I know that the chance of a strike is technically taken off the table, but nothing has been signed yet. So there's a certain amount of uncertainty on the LNG market. Make sure we're better and we're secured, and then go out, because there isn't a whole lot of middle distillate crude grades out there. So let's not get ahead of ourselves. So I think they're trying to pull back on that by pulling back, helping support that crack spread while they continue to sell. And then if things play out, which they likely will at this point, we should see a fourth quota. Now, when we start looking at gasoline and distillates coming from Saudi, UAE, and Kuwait, you can see that Saudi is still very much at the higher end. It's pulled back a bit, but you can still see a lot coming out, where UAE and Kuwait have pulled back a bit more. Again, a lot of this is timing. A lot of this is kind of playing out with the Saudi side still continuing to take advantage of that market. Then when you look at Russia, this gives you an idea of where they are. They're at the low levels that they haven't been at since 2019. And this is where they've started to soften slightly on the export quotas, where they said that before there was an outright ban, but if you had forward sold, they're saying, well, if you've already agreed to it, we'll honor it, but we're not going to renew it. So it's just going to be a timing side. They've slowed down the increase in pricing. You're starting to see domestic prices roll over a bit, but again, they're still well above where they were prior to the Ukrainian war, prior to a lot of the sanctions. So it's going to be that back and forth. And as they've gone into maintenance season, they're struggling to get equipment, to get the necessary pieces to accomplish those turnarounds that they were expecting. So again, things that are going to continue to be a problem. Middle East crude oil floating storage, you can see here, it's below where we were in 2022. It's right where we were in 21. So this is going to be that balancing act. As OSPs have gone back up, as Brent continues to be cheaper than Dubai, you're likely going to see some of this increase a bit, especially as there's more than enough, based on the data out there, Nigerian barrels. We'll see some of this get stuck in the market. U.S. crude exports continuing to be strong. The increase in OSPs, again, by Saudi going into Asia is just going to support our flows. We don't see anything slowing down so much into the U.S. into Europe. The demand hit is going to bite a bit more in Asia. So we do see some of those exports slowing into Asia, but not too much on that side as well. So then when we start looking at the crack spreads, when we look at the distillate, you can see, as we were saying at the end of August, we were at a high, and it's, look, there's going to be that pullback. We're going to see that slowdown, and there's where we continue to see the slowdown. It'll likely bounce here. It'll likely kind of find a bit of this level, but when you start looking at demand, when you start looking at storage, storage is getting a bit more normal, because remember, we were saying that the Middle East distillate cargoes were still not really finding a way into the U.S. or the Atlantic Basin. But we're finding a home into Asia, and that's seeing some of those increases in storage, which we'll talk about in a minute. Then when you look at Dubai versus Brent, you can see that there's still that discount, which is why U.S. crudes are still going to be fairly strong going into Asia, not as they were, but still elevated. There was some forward sales for October and November already, so there's already some that's already slated to go there. But these are going to be some of those important pieces to watch as they try to balance out. Asia floating storage still slightly above 22. We do see that turning higher a bit because we have seen small additional purchases, and a lot of that is because we've seen Russia increase exports. As they've increased exports of crude, prices have come down a bit, piquing some interest from not only just China but also India. So again, that's going to be a little bit supportive, and that'll put a little bit more into floating storage. We're not going above 21 levels, but again, we should stay above those 22. And here's what we're talking about, where you still have that elevated amount of crude buying from China. We're seasonally adjusted all-time highs, still staying elevated. And a lot of this is just taking advantage of some of those benefits that remain in the market, because when you look at refinery utilization rates, it's still very low. We're below 22 levels. Seasonally speaking, we're at the very low end of the seasonal norms, because there's still a lot of product in storage, and there's really no impetus to do anything extra because there's not a lot of domestic demand. You're exporting what you can. You're unsure about that fourth quota. So you're going to try to be proactive in purchasing, priced appropriately crude or discounted crude, where you're going to try to then balance where some of those flows are. So we do see this getting, runs increasing a bit. But then it's going to be interesting to see how do things progress throughout the end of October. Excuse me, because typically we see the end of maintenance. You see a bit more activity, so we should see that move along that seasonal line, which is why, again, they're kind of forward buying some of that discounted crude. Now, Golden Week is obviously a big driving period. So here, back in last year, you had zero COVID policy. You had a lot of restrictions on travel. That is now gone. So it makes sense to see people doing what they can, moving about as much more. This is obviously going to pull back as it normally does. We do see that slowdown. People are kind of using this as the last hurrah. And then we do see that slowdown as we go into the end of the year. It's still going to be better than the month changes that were used in 21. It just won't be as good as pre-COVID, as we've been discussing. West Africa floating storage still remains elevated. You can see some has gotten sold. A lot of that is Angola, as Nigeria continues to see some of their crude build up in October as well as November. And that, again, is going to keep that floating storage elevated until we start to see a little bit more price cuts on the OSP differential side. Crude products, when you look at gasoline, we had an increase of 23,000 barrels, still slightly above the 5-year average. As we were saying, distillate increased 123,000 barrels a day in terms of exports, but that's still well below the 5-year average, the year over year, and that's something that we think is going to continue. Propylene pulled back 64,000 barrels, but again, 870,000 above the 5-year. It's going to still stay robust. And then when you look at crude oil exports, still remaining at the very high end of that, 4.2, 4.3 million barrel a day export. When you look at motor gasoline exports, here you can see, hugging that 5-year average. We believe it stays at that 5-year average. It'll likely try to push a little bit higher because now we've had a big increase in storage. They're going to try to balance that out because realistically, refiners are still going to make money cracking for distillate or diesel, but you inherently make gasoline, so they're going to try to free up some of that space, which is also going to be another pressure point for gasoline storage. Then when you look at distillate exports, you're still making good money at home. There's the ARB going into Europe is not the same, and that's again going to keep that product in the US and result in some of those additional builds in PADD 3, as we've been saying. Crude oil exports still staying strong. We don't see that changing. Propylene, still, again, record-setting averages. We don't see that changing. Things are still going to be very strong, continue to move through, and that's something that we will see overall. Ethane exports, as we've been saying, again, still strong, record-setting. We don't see that changing as well, and it will be supportive of the NGL basket. Then when we start turning to Fujairah, overall, we had a build of about 2.15 million barrels. Still below the 20 million barrel level, but moving higher. Light distillate increased 568,000 barrels up to 4.589. East of Suez gasoline complex strengthened on the back of domestic demand. China, Golden Week, holidays. Some participants said that domestic demand for gasoline in China could be buoyed by high levels of internal travel, which we've seen. It's just, is that going to continue? And we do think it's a bit of a flash in the pan, because people are going to take advantage of it. They haven't been able to enjoy Golden Week really for 3 years at this point. So let's go take advantage of it. Now, the question is going to be what happens going forward, and we do think that we get some of that slowdown. Middle distillate had a build of at 116,000 barrels to 2.33 million barrels. Backwardation east of Asia, ultra low sulfur gas oil market slowed. It eased, and again, a lot of that was from that movement of Middle Eastern product. Fresh pricing direction amid the Golden Week holiday. Volume of Singapore gas oil swaps that traded slowed down. Month-on-month rise in trading volumes was underpinned by a tight supply outlook. Curb on Russian diesel outflows would see buyers who benefited from the Russian cap, which again is going to be that India-China flow, as well as that Middle Eastern push. Heavy resid increased by 1.466 million barrels to 11.653 million. Spot trading, the bunker hubs remained a bit sluggish. It got a little bit better with the easing crude pricing, but realistically, as we've talked about in the econ shows, trade continues to be under pressure. I think this Brent time spread puts into perspective just what that time spread looked like. And this is why, we had this massive surge. But we said, look, too much too fast. This is going to bite people. And that's where when you start then looking at physical movements, you had that slowdown, which is why we saw that pull down and we didn't see that support or that leap from 95 to 100, 105. If anything, we saw that drop. And here we continue to see that. Now, when we start looking at the flows in general, you can see Nigeria is expected to increase a bit in November. Things still remain fairly stable on the Libya side. As we talked about in the coming back to what we discussed in Nigeria and Angola. Things are a bit sluggish in Nigeria. Prices are still elevated. We do see some of those reductions. We have seen some of the withdrawal of offers that they gone from 315 to 290, and we do see another leg down in some of those physical flows. When you turn to Europe, you can see that crude had a nice drop in storage, coming in at the lows. Seasonally speaking, it normally has a sizable drop. You can see that the rate of change was fairly extensive. We do see that bounce. And the reason why we'll see that bounce is because we do have maintenance season coming up. And there's a decent amount of products sitting in storage, especially when you talk about the gasoline market, which is going to hinder some of that demand. Gasoline had a build of 2. Gas oil had a build of 79. So again, the gas oil market, slight build in storage. We see that creeping higher, which is going to, again, put pressure on the ARB of U.S. product going into Europe. If anything, it's going to keep them kind of on the sidelines a bit, which should hopefully help the U.S. in some of their buying. Gasoline, seasonally adjusted all-time highs, and this is with a big increase of exports from Europe into the U.S. We don't see that changing. This is going to continue to be a huge overhang. Fuel oil, it's at the lower end of that seasonal bump when you look at where we are. We're right in line with where we were in 22. We don't see a huge reopening of an ARB. So again, if anything, that will push some recracking, which again will reduce some of that need for that crude, increasing some of the crude storage. When we look at Singapore, the totals are still hanging around that 18-year average. When you look at like distillates, you can see the only 2 times it was higher was 2020 and 2022. So we're still above 21 levels. And realistically, we see that pivoting back up, and we do see us getting back to 2020 levels. The comps get easier. And if you look at it, seasonally speaking, we have draws. It's just the rate of change of these draws have been much slower, which has been our base case. It's like, look, we're going to have seasonal moves. It's just the rate of change is going to be disappointing, and that's going to put more product in storage, which we've seen here, which is why, again, the gasoline market is very oversupplied, which is going to be that overhang for refining cracks. And then when you look at distillate storage in Singapore, we're at a 2023 high. And this is what we were saying, of that Middle Eastern product is finding a home over in Asia, and that's going to again put some of that pressure, more pressure, I should say, on the Asian crack versus the U.S. crack. Resid continuing to kind of flounder and sit at the average. Realistically, we don't see that moving up or down at this point, and kind of holding that average. North Sea volume floating storage is at a low. We will see some of that come back, or I should say flat. We will see some small increases from this point. And then Europe continues to be at the low end, again, trying to balancing act in general. We don't see too much of a shift. It should stay at that low end and really track where we were in 22, because it's right at that green line. So that's what we have for you today. If you have any questions, please let us know. We'd appreciate your support. Share, subscribe, support us in any way you can. Thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network.